Welcome to the myvelocitybanking.com site where we show you how to get out of debt faster using the My Velocity Banking method. I'm sitting outside on a nice August day enjoying the sunshine. And if you already haven't done so, make sure you head over to the site, get a free account, put in your information, your expenses, your income, your debts, and then you'll get a debt payment schedule, how to get out of debt faster using the My Velocity Banking method. So today I'm going to start breaking down the fundamentals of velocity banking. I've got a lot of coaching calls I've did, got a lot of emails we've gotten about sort of the core fundamentals. Because like you, like everybody, I've been brainwashed. I was brainwashed by the big banks for the longest time. That I need to save, 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 save.
Start saving. Easily set, track, and control your goals right from the Chase mobile app.
And there's also some actually, let's back it up. So which will take us to what we're going to talk about today. So today we're going to talk about cash flow. Cash flow, cash flow, cash flow. Because that's one of the fundamental pieces when you're doing velocity banking. So what is cash flow? I think all of us have heard of it. So cash flow is just pretty much the difference between what you make, so your income, minus everything else you spend in the month, your expenses, whatever is left, right? Whatever is left, that's your cash flow. Now, here's what I've been seeing in a lot of the coaching calls I've been doing, is that people still don't get the idea that you don't have to save money, that whatever you're saving should actually go towards your cash flow. Now, I know there's a lot of gurus out there, financial wizards that are telling you, oh, you got to save 5% of your income or 10% or 20% or whatever it is, percentage of your income. You put that to savings. You just scroll that away. Okay, that is nonsense when you're trying to get out of debt. That is nonsense when you're doing velocity banking. Now, it's perfectly good advice if you're out of debt or you don't have a lot of debt or you can manage your debt. All that makes sense. Put X amount away and that makes sense. But where it doesn't make sense, which is what I saw a lot, I've been seeing a lot, is that, I have a client who's like put away $100 a month. They save $100 a month. In the meantime, they owe about like $5,000 on their credit card. They're putting this $100 a month. So I'm like, what are you doing? When you put away money under the velocity banking method, that is dead money. It's not working for you. I don't care what the banks say. I don't care how much interest that they're going to give you. It will never be more than the interest you're paying on your credit card. So you can have like $10,000 in your savings and you still owe $5,000. It's still not going to make any financial mathematical sense, right? So I just said, stop your saving, take anything out you have in savings, pay off this credit card, because once you pay this off, your cash flow automatically increases, right? And then the cash flow is key because that's what pays off your chunk payments. Now, there's only two ways to increase cash flow, right? So you either make more money or you spend less. That's pretty much it. There's no other way to do it. You either get more money or you spend less money. Now, if you don't save, you take everything that you were putting into savings into your cash flow, that's kind of like making more money because now your income has like gone up. And so that will pay off your chunk payments faster. Now, why is that important? Because the faster you pay off your chunk payments, the more chunks you can make, and the faster you'll shrink down the timeline of the debt you're trying to pay off. So, for example, if you're trying to pay off your mortgage using the velocity banking method, you make chunk payments. So we'll talk about chunk payments and how that actually works in another video. But you make the chunk payments, and that chunk payment is paid off by your cash flow each month. And then when that chunk payment is done, you do another chunk payment, and so on and so forth. So that's the core of the velocity banking method. Now, that's why your cash flow needs to go up, because you will pay those chunks faster. So that's what the lesson today is that when you're doing velocity banking, ignore these financial gurus in terms of saving your X amount a month. Don't do it because it's not going to help you. You have to get to the stage where it actually helps you. Right now, it is going to harm you. So you need to increase your cash flow. So once you take whatever you were putting in savings, and you pay that towards, you put that towards your cash flow, you're going to have to be able to get out of debt faster and then increase your cash flow at the exact same time, because you paid off a credit card, you paid off a car, whichever it is. Now you got extra money floating around at the end of the month. So when you get into a nice position where all your debts are almost gone, and if you have an account at myvelocitybanking.com, you will see this. You will see how fast you would actually get out of debt. And once you're at this stage, be it a year, be it 2 years, be it 5 years, when you're at this stage, then you could do whatever these financial gurus are telling you to put away, like 5% or 10% or 15% or X amount a month. Even before you get there, you'll see that you're actually increasing your cash flow, your debts becoming a little bit less. And when you get in the position where you feel comfortable, then maybe you can start to save. But until now, saving is pointless when you're doing velocity banking, because it defeats the whole purpose, which is to get out of debt. That's the purpose. All right, until next time, if you like this video, make sure you subscribe to our channel. Make sure you share this with other people that you feel they would find it valuable. And stay tuned, because we're going to bring you a lot more content on this channel.